rates have been quite high. They are booked out, sold out. But let's try and understand with Mr. Sanjay Sethi, MD and CEO at Chalet Hotels, to understand whether this momentum is sustainable or not. Mr. Sethi, hi, good morning. Thank you so much for making time and speaking with us. Well, we all know that in December quarter, there is usually a high amount of interest with respect to travel. But this time around, even in Q4 of the year, the momentum has been quite strong, right? Could you talk to us about what's the occupancy level like, and what does it do to your average key rate, etc.?
So good morning, and pleasure being back on ET now on Tuesday morning. Look, I can talk about the third quarter occupancies and average room rates, which were healthy, close to 70%, with the average room rates climbing up to 10,100 for our portfolio. Quarter four has been consistent with that. In fact, the occupancies and rates are marginally higher than the previous quarter. So we expect this quarter to be a strong quarter. I must sort of highlight to you quarter-on-quarter improvement over here. We did say at the end of quarter two that was the best ever quarter for Chalet Hotels, both on revenue-wise and EBITDA-wise. And then quarter three, we came back to you and said, again, this is the best ever. So we surpassed Q2. Q3 should be more or less in line with that. Q4 should be more or less in line with that. In addition to that, we've got a lot of new assets coming into play. In the next few weeks, we've got the additional 88 rooms at Pune almost ready. We've got the office at Bangalore ready. We've got the hotel at Hyderabad, which will be ready and operational by. We've got the office block in Powai ready, which will be operational in another 2 or 3 months' time. So there's a lot happening on the CapEx side, which is going to fructify into operating assets now, which will again boost up EBITDA and revenue numbers for Chalet Hotels. In addition to that, you must be aware that we've acquired the Duke's Retreat, a Lonavala-based iconic resort property, 40-year-old property, which we'll now sort of renovate, expand, and reposition to much higher levels.
Sanjay, when we just talk about, how things are moving in terms of demand, can you just tell us inflation is, pinching in everything, but on the luxury side of the market, are you seeing that the pinch is slightly low as of now in terms of demand?
We're not seeing any pinch at all on the demand side. The occupancies continue to be robust. The average room rates continue to be growing. We've had high acceptance of annual contracts, which are significantly higher than the previous years by corporates. So I think as of now, things look positive. We do have the global threat of the economic crisis that looms over everyone. But for now, at least we see no negative impact on the hospitality industry. You must remember the domestic demand for within India is so strong that we expect that to sort of sustain us over the next few quarters.
I have a little more question I want to understand from the industry perspective, not only for Chalet. We saw that companies such as yours, of course, and few others, very, very few of them, actually went ahead and in the face of the headwinds, added capacities or rooms inventory when chips were down. And of course, you're benefiting, your numbers are last couple of quarters are showing that trend. But what phase of the cycle are we right now? How long does it, this cycle or this structural trend appear to you? Are we in the mid phase? Are we still in the early? Where exactly are we? Because this is a cyclical industry after all.
Yeah, from a helicopter view, we are in the early stages right now. Notwithstanding the economic challenges that we're facing or the financial crisis that we're facing globally, that will pass at some point of time. Overall, we see this for the foreseeable future, which is roughly around 5-6 years from now. We expect the demand-supply patterns to be favorable for growth.
Demand-supply dynamics continue to be favorable. I just wanted a word regarding one of the recent acquisitions that you made with respect to Duke's Resort of around 135 crore in terms of valuation. What kind of upside do you expect? Will it going to be EPS accretive? And how are you going to fund this particular acquisition?
So let me begin with the funding. It's all been funded through internal accruals. We've got 80 rooms there. We expand to around 128 for sure, maybe some more. So it will be 50% additional and more additional capacity, almost 60% additional capacity actually in the property. We'll also renovate to reposition the property from where it is. The retreat had average room rates of about 8,600 year to date as of this year, with occupancies at around 72%. We think the upside is strong. We can actually increase the rates going forward by about 60-70%. And with additional 50-60% capacity, this can be a very good acquisition for us. It's value accretive in the sense that its EBITDA numbers are already support the purchase price. We have purchased this at roughly around 10x of EBITDA this year. The EBITDA is expected to be 13.1 crores, which is a fairly decent acquisition price. So it remains value accretive from day one, but I think when we reposition it, it should be a clear winner for us. But look, let's not look at it just the Duke's Retreat in its isolation. This is our first baby step towards expanding into the leisure portfolio. We already operate one small resort in Mud Island as an operating model. This is the second one that we'll have, which we've acquired now. And we're looking for more opportunities on the leisure side, in addition to the greenfields that we're building ourselves.
Say that Duke Resort was such an amazing stock pick, if I could say. You picked that particular property so well. We in Mumbai, swear by that location because of the valley view. Are you spotting for more opportunities in similar locations for your leisure foray expansion, which you just spoke about, even in either Khandala or maybe Alibag or maybe going towards Goa or, Coorg that ways?
Yes, we're looking at pan
accordingly, Sanjay. Wherever you are going to expand, Ajay is going to plan his holiday accordingly. He's clearly in the travel mode.
We'll do a CEO at work.
We look forward to having all of you stay there. More the merrier for us. Occupancies go up. But listen, I think, yes, we are looking at expanding the leisure. It's not going to be majority of our portfolio ever, but it needs to be a material part of the portfolio. The idea is to get a hub and spoke method where we can consolidate drivable distance resorts. We are looking at the northern side too. We're looking at Goa very aggressively. We've looked at Kerala with one or two opportunities maybe there for us. We do have a historical land parcel in Kerala that's available with us, which we could develop at some point of time. But leisure is clearly a well thought out strategy. As I said, this is the first baby step towards it. Our only criteria is that it should be value accretive with IRRs 20% and northwards, and that's critical for us.
Before I let you go, a quick word on the financials going forward with respect to outlook, because of course FY23 on account of the lower base is looking quite strong with the growth expectation of around 70 to 80% if I have that right, and even the margins have expanded considerably to around 30%. Could you maintain that kind of run rate in FY24? Any ballpark number that you can leave us with? What, 6,500 crore odd on the top line?
Sorry, what is the number again?
With respect to your growth targets, what are you envisaging in the coming year?
No, the number that you gave, 65 something?
Yeah, I think that was one of the projections that were made with respect to the top line, if I have it right. In any case, what's your projection for?
So look, we are going to be comfortably north of 1,000 crores, 1,100, 1,200 crores actually at the end of the quarter, but that's remains to be seen and announced. Margins continue to be healthy. We've reported 40+% margins in our portfolio, and that will continue to stay there. We do hope next year will be stronger than this. And therefore, we will continue to provide industry-leading EBITDA margins from Chalet.
Okay, Mr. Sethi, we'll let you go on that note. Thank you so much for joining us. Appreciate your time for ET Now this morning.